Hello everyone. In this video, we will learn about when interest rate get cuts, whether one should reduce EMI or reduce loan tenure. So before setting the context, let's learn what has been happened in the calendar year 25. So recently, RBI has cut repo rate in calendar year 2025. In 2025, the Reserve Bank of India and its MPC, Monetary Policy Committee, has undertaken a series of repo rate cuts to support economic growth and improve liquidity conditions in the system. Cumulative, the RBI has reduced the repo rate by 125 basis point during the calendar year 2025, and 1 basis point is equal to 0.01%. So for borrowers, especially with the floating rate loans such as home loans, education loans, and business loans, this change directly impacts the interest rate charged by the banks and the NBFCs. So the repo rate timeline for the 2025 calendar year was uh, it was the first repo rate cut in early 2025, additional reduction in mid 2025, and further rate easing later in the year. So total reduction 125 basis points. And each repo rate gradually transmits into a lower lending rate, particularly for loans linked with external benchmarks such as repo rate. Now connecting the RBI actions to the borrowers. So for the 125 basis cut in repo rate, there is a lower lending rate to the borrower. So when the RBI cuts rate, the bank's cost of borrowing reduces and the lending rates on the floating rate loans tend to come down over time. So now the borrowers, when they go and ask for a loan to the bank from the bank, they get at a lower interest rate. As a borrower, this create two choices for you. So if suppose you have taken an existing loan and the bank gives you two options when there is a cut in the interest rate. The two choices are keep the tenure same and reduce EMI, or keep the EMI same and reduce the loan tenure. Note, neither option is universally better. The suitability depends on the personal cash flows, financial goals, and the risk comfort. So now we will take a base example of a home loan of amount 50 lakh rupees at a rate of interest of 8.5% per annum for a duration of 25 years or 300 months. And now we will go to Excel and calculate their EMI. And to set the context right, the scenario we will take is 1% interest rate cut to the existing loan, and we will assume that the outstanding loan and the duration remains the same, which is 50 lakh and 300 months respectively. So our effective new rate of interest will be 7.5% per annum. So first we will set the base example in the Excel, and then we will run through two scenarios. So the base example is we have taken a home loan of 50 lakh rupees and an interest rate of 8.5% per annum. And the tenure is 300 months or 25 years. So we can calculate 25 into 12 months in a year. So to calculate the EMI, we will use PMT function, and the rate of interest is 8.5% divided by 12. For 300 months we have taken the loan, and the present value of loan is 50 lakh rupees. So the EMI we get is 40,260 approximately. Now the total amount paid is uh, 40,000 each month for next 300 months. So 40 into 300 months, and I will insert a prefix with minus sign to make the calculation easy. So total amount I have paid is on this 50 lakh loan is 1 crore 20 lakhs. which includes both my principal and my interest component. So the total interest I have paid is the total amount which I have paid in 300 months minus the loan amount. So total interest paid out of 1.2 crore loan or 1.2 crore amount paid is 70 lakhs approximately and 50 lakh my loan. So the breakup is 41% of 1.2 crore is my loan amount and 59% or approximately 60% is my interest paid. So now we have set the context for the base scenario. Now we will move towards the scenario where I will be reducing the EMI and keeping the tenure same. So my loan amount remains the same, and I have taken the example from the base scenario. We are taking or assuming a rate cut of 1%. So my new interest rate would be 8.5 minus the 1% rate cut. This is an example, and loan amount remains as same 50 lakh. The tenure remains the same as 300 months, and the new EMI we will calculate as using the PMT function again, which is rate as 7.5% divided by 12, and NPR number of period will be 300 months, and the present value of loan is 50 lakh rupees. So my tenure remains same as 300 months, but my EMI has reduced from 40,200 rupees to approximately 37,000 rupees. So the total amount we will be paying over the 300 months will be my monthly EMI into 300 months. So earlier I was paying around 1.2 crores. Now I will be paying around 1.1 crore in next 300 months. So the total interest I will be paying is the total amount which I have paid minus the original loan which I took, which is 60 lakh. But now to calculate how much interest I have saved, so earlier I was paying 70 lakh as interest, and now I am paying around 61 lakh as interest. So my interest saving in absolute amount is 9.93 lakh. So I will get back to my presentation and show you what are the advantages and disadvantages of this scenario. So rate cut, reducing EMI and same tenure. So what are the advantages of reducing the EMI and keeping the tenure same? It do improve our monthly cash flow. Lower EMI reduces the immediate financial pressure and increase disposable income. Flexibility in usage of saving, surplus cash can be directed towards the investment, emergency funds, or lifestyle needs. And what are the disadvantages of reducing the EMI? Higher total interest paid over the time, longer repayment period generally results in higher cumulative interest outgo, and longer debt duration. Loan continues for the original tenure, keeping the financial obligation active for a longer period. Now we will again go to our Excel and go on the another scenario where I will be reducing my tenure and keeping the EMI safe. But before that, earlier we were paying 59% as our total interest paid, and around 41 was our loan principal. But interest portion has been reduced from 59 to 55%. Now the second scenario. Again, the rate cut example is 1%. The new interest rate will be 8.5 minus 1, which is 7.5. My loan amount remains same as 50 lakh, and the EMI in this example will be same as the base scenario EMI. So to calculate the number of number of period or the new tenure will we will be using NPR. So rate of interest of 7.5 divided by 12. Payments which we will be doing per month is same as 40,200 approximately, and my loan outstanding is 50 lakh. So I get to know that my tenure reduced from 300 months to 240 months approximately, Now to calculate it in years, we divide by 12. So my loan originally was for 25 years. Now it has been reduced to 20 years. So my new tenure is 240 months, and now I want to calculate the total amount paid will be minus EMI which I am paying every month, and for the new tenure of 240 months. So the total interest paid will be the total amount which I have paid over the 240 months and the original principal which I took, which is total interest paid is 46 lakh. Now to calculate the interest which I will be saving in this scenario will be the base scenario interest minus the new scenario interest. So the interest save is higher than the previous scenario where I was reducing my EMI and keeping the tenure same. So here I am saving around 24 lakhs, and previously I was saving around 10 lakhs. So the total interest component has gone down from 49 to 55% to 48%. Now we will go back to our presentation and learn the advantages and disadvantages of keeping the EMI same and reducing the tenure. So advantages: lower total interest outgo, faster principal repayment leads to lower cumulative interest over the life of the loan, earlier debt freedom. As we can see earlier, we were paying three for the 300 months, but now we are paying for 240 months. So loan ends sooner, and improving long-term financial flexibility and reducing leverage. Disadvantages: higher fixed monthly commitment, EMI remains unchanged, which may limit our monthly cash flow flexibility. Now, what are the key factors to consider before you make a decision? Financial stability. If you have a stable income and can comfortably afford the original EMI, shortening the tenure is generally a better choice. Financial goal: if your priority is to save money and become debt free sooner, reduce the tenure is the smarter choice. And the cash flow need: if you have more immediate liquidity, reducing the EMI might be a better choice. Now, as at this stage, it is important to understand that both choices are financially valid. One prioritizes the long term interest saving and the earlier loan closure, while the other prioritizes the short term cash flow, comfort, and the flexibility. Before you end this video, I will urge to pause the video and read the disclaimer. Thank you so much.